Hello subscribers, welcome to the Fast Profits Daily. I'm Brijesh Bhatia. FY22-23 has been a great, I would say, for Indian markets. We have seen especially the calendar year 22 Indian markets outperforming by a big margin. Where India was on a positive note, most of the global markets, I would say all the global markets, the benchmark, leading benchmark indices, and then on negative note with Kospi, Hang Seng, and even DAX index falling more than 10%. If I just look at 2023 start, the decoupling effect is getting neutralized. India has been underperforming. The first quarter we saw India down by nearly 4%, whereas DAX, which has gained around 12-13%, even Dow has been on a positive note. So that decoupling effect is getting neutralized now. Well, if I just look at the financial years 2020-23, there were some of the hits and misses for sector side as well. And the one sector which I think was underperformer in FY22-23 may turn out to be an outperformer in FY23-24. So just look at the how the sectors performed in FY2023. So on your screen, it's a performance of the sector indices. PSU Bank led the rally with around 36% gains. And if you remember, back in during the Diwali time, I have recorded that two sectors which could lead the next 1 year could be the one of was the PSU Bank. And PSU Bank has been one of the outperformer in the last financial year as well. Followed by FMCG, which has gained around 26%, and thanks to the ITC, which has been on a positive note. I guess a year ago, there were all memes about the ITC being underperforming, and then there was a change of wave into the ITC stock price, and we have seen a huge outperformance from the ITC. Well, that has led FMCG with the gains of 26%. CPSC around again 16%. And if you remember, I've done a video on CPSC as well. If you haven't watched, do watch that CPSC index video as well. And on to the underperformer side, the bottom was media, followed by IT, and again IT, and again if you look at the energy space as well, which was down by around nearly 12%. So IT and energy has been one of the laggard for underperformers of into the sector. And even if I just look at IT have been underperformer globally, not only the India, but even look at the US, Nasdaq has been underperforming by a huge margin against the Dow 30 or S&P 500. So yes, IT has been into the global problems, and that effect is there on Indian stocks as well. So one sector where I think which has been on a downside with around 11.65% energy, the needle could change into 2023-24 FY financial year. So why I think so? So let's look at the first constituents. And Reliance Energy holds the highest with around somewhere around 60% weights into the energy index. NTPC, Power Grid, ONGC, Adani Green, BPCL, Tata Power, IOC, GAIL, and Reliance Transmission are the few stocks which contribute or constituents of this Nifty Energy Index. Before I move on to the charts, let's do some data crunching. How the seasonality analysis has performed for energy index. So the next chart is seasonality analysis for monthly on a monthly basis. And interestingly, from 2011, so we have nearly 12 years of data for April and 13 for Jan, Feb, March. If you look at March has been a gainer for energy index, outperforming the Nifty, which was down by nearly 1.5-2%. So energy index there was up by around 1%, and as I said, 60% weights holds by the Reliance industry, which has hit 52-week low into the March month. But yes, if I just look at the seasonal index for April over year, April is one of the most outperforming average performance wise onto the energy index with 3.3% gain. And if I look at the 58% to 42% strike rate, which means that on the positive close there were 58 percent times it closed on a positive side against the 42 negative. Interestingly, if you look at the year-wise performance, whenever there was a positive performance, it has gained by 4%, 5%, 18%, 10%. So once the bullish rally starts, it doesn't stop with a minimal percentage. There were only ones which has been minus 2.81%, but average loss, if you look at, it's nearly 1 or less than 1. So they gains over here once the rally start, and we have seen this rally starting right into the March end, where if I just look at the week on week performance over here. So if you look at week on performance, so last week was around week 13 of the year 2023, where it was up by 1%. And if you look at the average performance of for week on week for last 13 years, for 13th week it was around 0.72 percent. But if I just look at for next 3 weeks, including the current week, which is week 14, 15, and 16 over here, if I just marked yellow, look at the average gain for last 12 years: 1%, followed by 1.63%, followed by 1% or 0.94 nearly. And look at the over there onto the downside, positive week 75% by 25, which means that out of 12, 9 has been positive years for the week 14. Again, 25 has been negative, but yes, this time it's being a truncated week. We have two holidays, Tuesday and Friday. But yes, still I think the performance will continue onto the positive side. And look at the week 17, which is again minimal negative with 0.23%. Again, it's the ratio of around 50-50%. So I think yes, April is one of the most outperforming seasonality analysis wise. And if I just look at the average gains, which is again 3.3% for April, and if I just look at the week on week performance, the next 3 weeks will be very, very crucial. So week 14, 15, 16, where the index gains by 1.63 and nearly 1% gain. So yes, I believe yes, this is a start of for the energy index. And if I just look at importantly, if I just look at the structure onto the charts as well, it's been promising. So before I move on to the sector charts, I just want to highlight one of the study which I generally follow using the point and figure chart. So if I just look at, this is point and figure performance score, which I generally follow looking at the stocks wise trend. So I've taken a 3 criteria: 0.25% by 3, 1% by 3, and 2% by 3 on a daily basis. And if I've just rated the score upon depending upon the outperformance of each constituents into the energy basket. So here ONGC and NTPC leads the table with around 7.7 score, which is again a slight on a higher level. BPCL 5, GAIL 4, Power Grid 4, and the only negative is the Adani Green, and it's been on a flatter note with the IOC. So if I just look at again, Adani Green has been the group issues over there, so I don't want to focus over there. But if I just look at the stock wise over here, it's been that things are coming back very, very strongly. And again, ONGC and NTPC are outperforming into the energy basket. They are rallying on to the higher side. Now moving on to the charts. So let's start with the first weekly chart over here. And if I just look at the weekly chart, right from 28,000, 27,500 index has corrected downside to around 22,000 now. But interestingly, it is holding 200 weekly exponential moving average, which was last tested in 2020 during the pandemic time. So I think yes, this will be very, very important long-term average where I'm expecting index to hold onto the long term. The next chart onto the pattern side, if I just look at, index has just taken support right at the falling channel. So generally the falling channel tends to break onto the positive side. And if you look at the recent over here, index has taken support at falling channel and slow and steady moving northwards, indicating the reversal is in place. The next chart over here is the Fibonacci retracements onto the charts. Now, if I just look at right from the March 2020 low to the highs of around 2022, index has taken the support at 38.2% Fibonacci retracements. Now, 38.2 and 50 plays a key important role. When there is a long-term bullish trend, what we are seeing right from around 2020, there has been a higher low structure over here. The 38.2 and 50% retracements play a key important role over here. And when this retracement, when you see the reversal from these retracements, they indicate there is a resumption in the bullish trend. Now, over here with the Fibonacci retracement, with the channel over here and prices trending above the 200 days average, it confluences that the prices are taking support at the multiple technical patterns over here, and it is showing a sign of reversal. So yes, this is a bullish structure onto the weekly chart. And if I just convert this chart into the candlestick pattern over here, the same pattern, Fibonacci channel as well as 200 days 200 weekly average over here, the orange line, uh, we are witnessing the bullish candlestick reversal, which is the piercing candle. Now, if you look at the basically the piercing candle is when the prices open the gap down and it closes nearly 50% from the previous bearish candle body. So that's the candlestick pattern. Again, this is a bullish reversal candlestick pattern. Bullish reversal candlestick pattern forming right at the support of channel Fibonacci and 200 days average indicates that there is reversal on cards. So yes, it seems that and again, don't forget the seasonality analysis indicated 3.3% gain for April, and for next 2 to 3 weeks it's been on a positive side. So yes, I believe yes, this reversal may take index onto the higher levels. I'm not looking for a next 3 weeks, 5 weeks, but I'm looking from a 1 year perspective that this is a long term support area, which where the index is holding, and we may see the reversal onto the positive side. If I just look at the RSI, which is again a strength, and as we know, 30 is the oversold territory and 70 is the overbought territory. Index on a weekly scale has hit the oversold territory, which was level was last seen in 2020. Again, 2020 was one of the year where we saw V-shaped recovery, but again the oversold levels have been there, and market have tested back around these 30 levels mark. So I believe again into the oversold territory, and if you look at the slope now turning onto the northwards, after testing 30, it is being trending onto the positive, so indicating that with the price action, the strength is also there onto the RSI to take index much higher. And I believe if this index continues to with the bullish trend, it may touch the channel onto the upper band, which is placed at somewhere around 26,500 levels. So currently somewhere around 22,800 levels, I'm expecting around 10-15% rally coming onto the index, or probably if you look at the 26,500, it's nearly 20% rally. So keeping in mind 12-15% rally can be on cards into the energy index, you should definitely keep a watch for FY23-24. If I just use the top down approach and move on to the daily chart, again if you look at the broader channel which we saw on the weekly scale, within that channel we are witnessing a broadening triangle over here. So once that triangle is taken out, probably 23,000 once is taken out, I believe the bullish momentum may accelerate onto the a higher level about 23,000. So keep a watch on these 23,000 levels. Another daily chart is point and figure 0.25% by 3. So every X and O you see on your screen, the red, blue X and red O, represents 0.25% of each X and O. So if I just look at the current scenario over here, after a rally, it's been consolidating around these levels. And once this breakout happen, it will be breakout from a double top buy, and not a traditional triple top buy, but a slightly similar triple top buy over here. So double top buy and triple top buy onto the point and figure chart indicate that the resumption in the bullish trend. So yes, if I just look at just to sum up, what are the patterns which we are seeing is onto the weekly charts, we are seeing that the falling channel, 38.2 Fibonacci retracement, 200 weekly exponential moving average, oversold RSI, which is turning onto the positive side, bullish candlestick reversal, the piercing candle, and onto the daily chart, it's been on the verge of breaking out of the double top and triple top by onto the point and figure. And as I said, seasonal analysis indicate that the April is just a start for a rally onto the energy index, and the rally continues. So as per the channel, I think if the bullish momentum continue, we may see a much higher level, about 26,000 levels at least onto the energy index. So that's all. I guess one of the sector you should definitely keep a watch on and look for accumulation into the energy space, the stocks which have been the constituents. So keeping in mind, as I said, as for the performance score, ONGC and NTPC and BPCL tops the table. So keep a watch on these three stocks. And again, energy basket is largely led by Reliance with 60% weightage. So keep a watch on that stock as well. Signing off, Brijesh Bhatia.
Thank you for tuning into Equitymaster's YouTube channel. If you enjoyed this video, we've got many more valuable investing ideas for you. Click the link in the description to access them now.